Thanks so much, Ralph, and thanks to Ralph and John and Matt and all the other organizers and participants today. I'm honored to be here. So as Ralph explained, we work at Good Jobs First on corporate welfare. Some people call them economic development incentives or business incentives. We call them economic development subsidies because, frankly, they fly at the face of the definition of the word incentive. And it's important to remind ourselves what that is supposed to be, the textbook definition, since we have professors in the room, right? An incentive is when there's something good that should happen, but isn't happening and won't happen until public dollars reduce private risk, right? So bringing a grocery store to a food desert, I think that's a great use of public dollars, right? People should not have to take a long bus ride to get dinner or get a prescription or buy shoes for their child. Or a citizen returning from incarceration needs new job skills. The private market's not going to make that happen. He needs more work training, and the taxpayer dollar should be used to do that. That's entirely appropriate use of incentives. Or another way the economists call this is addressing market imperfections. And but the trouble is that definition has long ago been corrupted and commodified. In fact, as I read Ralph's guideline for our conference today, almost every single principle he laid out applies in spades to our work. So just to tick them off, right? Monopolism, I'll explain to you, absolutely these things favor big businesses over small. Deception, mass deception or public disinformation and miseducation, absolutely inherent in the prisoner's dilemma of the way the site location system of this country works. Systemic crime, fraud, and abuse, absolutely baked into it. It's been called robbery in plain sight. Preferential tax treatment. Economic development subsidies equal preferential tax treatment. I'll explain how. Deliberate complexity to wear down and confuse and beleaguer taxpayers. Check, big time. And jurisdictional escapes. In this case, no need for sunscreen or goggles. You don't have to go offshore. You can go down the street or across the river. Welcome to the way federalism plays out darkly in the world of economic development. And I would add to the list, in my case, an utter lack and failure of executive branch leadership at both the federal and especially at the state level. So to tick off the boxes here, the monopolism or favoritism of big businesses. A decade ago, we documented that Walmart had received $1.2 billion in bricks and mortar subsidies. This is for their warehouses and their stores. More than 90% of their warehouses we figured out had gotten, TIF districts, enterprise zones, training grants, revenue bonds, property tax abatements, all these bread and butter economic development subsidies, even as the company was clearly exercising a predatory business model, causing lots of other retailers to close, growing at the expense of other retailers. You and I don't have more money to spend at retailers because we have another place to shop, right? We also identified two outdoor sporting goods chains, Cabela's and Bass Pro, which each, as they rose, got more than $1 billion in bricks and mortar subsidies to begin to monopolize the sporting goods market and retailing as well. We did a study looking at the Forbes 400, that is the richest 400 Americans, and determined that about a third of them derived their wealth from companies that had received economic development subsidies, including Bill Gates and Warren Buffett and the Koch brothers and Larry Ellison, and of course the Waltons behind Walmart. We also pointed out that a lot of these companies were low-wage, low-roaders, especially companies like Walmart and Amazon. Amazon, you've got the richest man in the world presiding over a company whose median wage is less than $14 an hour. And we're subsidizing it. We've subsidized Amazon now to the $1.6 billion for its warehouses and its data centers. And of course, it's now expecting a multi-billion-dollar payday for its second headquarters, or so-called HQ2, the biggest bid on the table being that from Maryland at $8.5 billion. We've even dug deeply into specific state programs to say, okay, besides this crazy monopolism at the national level, are these things fair at a more granular level? And the answer is not at all. So we took a deep dive looking at 4,000 deals in 14 states where on their face the programs were open to companies of every size, where theoretically you'd get a distribution of companies exercising their rights to claim the tax breaks. But instead what we found was that 70% of the deals and 90% of the dollars, with very little variation among states, were going to the big multi-state, multinational companies. And when we delved even deeper into 3 states, looking at every single dollar they spend for economic development, including all their small business mentoring programs and loan credit programs and entrepreneurship programs, they still spend more than 3/4 of their economic development dollars for the big boys and not for small companies, despite all their rhetoric and wrapping themselves in the mom and apple pie flag of small business. On deception and mass public miseducation, disinformation, this is part and parcel and baked into the corporate-dominated site location system in this country. It has more than an 80-year history. It dates back to the birth of a company called the Fantasy Factory Locating Service in New York City in the late 1930s. And this is what basically shields the bipartisan dogma that, and the baked-in bipartisan belief that tax breaks create jobs. The dirty big secret in economic development, the one they'll never tell you, is that incentives almost never determine where companies expand or relocate. They don't because they can't, because they're too small. Because all state and local taxes combined come to less than 2% of the average company's cost structure. It's the other 98+% of companies' cost structures, the business basics, the things they spend money on big time, labor, occupancy, raw materials, inputs, CEO bonuses, for crying out loud, almost always determine where companies expand or locate. But because we've got this prisoner's dilemma, this corporate-dominated site location system that allows them to hide that reality and exaggerate the significance of the tax breaks, we get taken to the cleaners. The math from a company's side is this. If you're like a company like Raytheon, doing what it did to Massachusetts years ago, insisting that the state rewrite its entire corporate income tax code in a way that you, Raytheon, say will save you about $21 million every year, and you get it, but you only spend about $600,000 on lobbying to win that change. That's the kind of irresistible, enormous return on investment driven behind getting these tax breaks. Of course, today, the business climatology business, the studies blowing smoke about cause and effect, were originally created during the 1970s by a group called the Council of State Manufacturers Association, mostly issued by the Chicago-based accounting firm Grant Thornton, debunked for the first time in 1986. Today they're carried on by Arthur Laffer and the American Legislative Exchange Council in their annual reports called Rich States, Poor States. And Dr. Peter Fisher, our friend, and others at gradingstates.org continue to debunk them. We call it selling snake oils to the states. Another point, Ralph, systemic crime, fraud, and abuse, or robbery in plain sight. The phrase job blackmail is not new, and really these are rigged auctions, right? If you can manipulate and hide what's really going on and create fake auctions and straw men to gin up the pressure on the place that you really want to go, then you're committing robbery in plain sight. As Bill Greider put it in an introduction to my book, he said, often the exchange is so transparently fraudulent, it's difficult to say who is the corporate culprit and who is the victim. And I agree with that. And obviously, in the case of Amazon's HQ2 right now, I believe that the company already knew what its shortlist was more than a year ago when they began their public auction. And then they certainly encouraged bids from places that had no prayer of qualifying because they didn't even facially meet the requirements in their RFP, but they're using that to generate pressure on the finalists as they narrow the search down. And they've got an enormous amount of blowback and lots of calling out from public officials who could easily see what they were doing. It was quite transparent. Preferential treatment. Subsidies equal preferential treatment, especially at the magnitude they've reached in some states now. The best example I can give you is something called single sales factor, which is an arcane way of rewriting a state's corporate income tax code, right? We have this problem of how do we assign different shares of profits to different states when you have a multi-state company. And there had been a post-war consensus on this, which has fallen apart under something called single sales factor. I don't have time to explain it, but it's an enormous windfall, especially for manufacturers. So in my old home state of Illinois, for example, when the state adopted single sales factor, when it was debating it, the Illinois Department of Revenue said, we think 5 companies will take home 63% of the tax reductions if you change your apportionment formula to single sales factor. 5 companies out of 133,000 corporate income tax filers in the state at that time. The state still did it. It's absolutely no strings attached, no records. None of those companies that got the 63% are required to maintain a single job or pay a decent wage or file any records about what they did with the savings or reinvest in Illinois. Many of them have had big layoffs. Many of the companies we know benefited the most from that law, have laid off thousands of people since the law was passed. Deliberate complexity to wear down and confuse taxpayers. You hear this all the time from anybody who tries to crawl inside a local or state system. The programs are loaded with jargon and acronyms and legalese and condescension, frankly, and active discouragement of civic participation. There's a lot of cost-benefit baloney being blown, apples and watermelons, frankly. Lots of things that are called benefits that are not apples to apples. That is, they are non-fiscal benefits. Let's take a company's payroll and hold it against the corporate income tax break. But you can't compare them, right? Because the salaries are not a fiscal benefit compared to the fiscal cost, and so on. This is very common. Many deals go down so hurriedly nobody has a chance to figure them out. A summer ago in Waukee, Iowa, Apple got a $208 million property tax abatement deal from the city of Waukee, Iowa. The deal was notified 1 day ahead of time and held in a public hearing that lasted 90 minutes that allowed 10 minutes for public comment. That was the public process for more than $200 million in abatements. Many of these hearings are held during work hours. They're held in places where people can't get to them. They're not well notified. The ultimate complexity in extremists, in my opinion, is this. It's one thing, incentives have always been defined historically as reducing the company's taxes. That is, the company's income taxes, the company's sales taxes, the company's property taxes. But we've gone beyond that. Today in America, in about one-third of the states, some companies, almost 3,000 companies now, actually keep some of their employees' state personal income taxes. That is, the workers, having never given any consent, having never been informed this is happening, they see a deduction on their pay stub for their state income tax bill, but at the end of the day, the money does not end up in the state treasury. It is kept by their employer to the tune of more than $700 million in 17 or 18 states now. It's not even complex, it's just theft, in my opinion. Jurisdictional escapes. I said it before that there's no need for sunscreen or goggles here. We have this thing called the second war among the states, or the dark way that federalism plays out in economic development. Business Week magazine coined the phrase, the second war among the states, 42 years ago. That's how persistent and long-standing this is. In some markets, it takes extreme forms. The extreme form being that you can literally move a very short distance, but you happen to move across a state line because you're in one of those mini metropolitan areas that straddle 1 or 2 state borders, and be greeted as a new job creator in the state where you've arrived. So Kansas City, for example, you can move from Kansas City, Missouri to Kansas City, Kansas, and that can be a very short distance. That can be a few blocks if you like, and you'll be greeted as a new job creator wherever you landed. You didn't create any new jobs. You might have even laid some people off. All you did is change the commuting patterns for your employees, but legally for qualifying for the incentives at your arriving state, you've now landed an 8-figure incentive package. About 20 companies have done this to the tune of more than $300 million in the last decade or so. A group of business leaders prevailed upon the Republican-led Missouri legislature and the Democratic governor then at the time, Jay Nixon, in 2014, to put a legally binding offer on the table to Sam Brownback, then the governor of Kansas. They said, this is a law, an illegally enacted law with a 2-year time clock on it. They said, if within 2 years you agree, Sam Brownback, to reciprocate, we will agree to carve out the Kansas City metro area and stop paying companies to just jump back and forth across the state line. We will cancel this interstate job fraud scheme that's going on here. And Sam Brownback had the administrative authority on his side of the line to do it by himself, and instead he let it lapse. Mr. Free Market Sam Brownback. I just want to conclude by talking about the lack of executive branch leadership. Brownback's not alone, frankly. As I said before, this has been a recognized national problem since at least '76 when Business Week called it out. We had a Supreme Court case called Daimler Chrysler v. Cuno that the Supremes heard in 2005 and then threw out on a technicality in 2006. On standing, it was a Commerce Clause case that came to naught. The last time the National Governors Association debated this issue was 1993, and they've been mum on it ever since. None of the regional, none of the partisan governors have touched the issue, incredibly. And now we have something we've never had before. We have the Trump effect, right? Uncle Sam has been missing in action all these decades. We've never had a president endorse the war among the states, but that's exactly what Donald Trump did in December of 2016 during the election transition period when he went to Carrier in Indianapolis to save those 800 jobs. And in part of that speech, he blessed the idea that companies can jack states around and jack cities around as long as they don't run offshore, he said. That's okay with me. Nor have we ever had a president who's actively participated in the war among the states. But thanks to reporting by the Washington Post now, we know that he absolutely did that. He and Jared Kushner actively aided Terry Gao, the chairman of Foxconn, as Foxconn last year played numerous states against each other for the big incentive package that ended up in southeastern Wisconsin with Governor Scott Walker. Never happened before. Nothing like it has ever happened like this before. So, you know, there's so much thumbing of the nose at market basics in this economic development scheme. God forbid that economic development subsidies would actually be based on erasing market imperfections. There was a lot of agreement between the left and the right here about returning to the true definition of incentives. They say, and I agree, let's not distort markets in favor of monopolists. And frankly, to Bob's point and those of many others, we need to save this money for things that really work for economic development, for the important things like schools and infrastructure and public health and public safety. Those are proven winners for economic development, and they also create more opportunity and fight inequality. Thank you.